We've got Mr. M. Narendra, who's Chairman and Managing Director of Indian Overseas Bank, now joining us on the show. Mr. Narendra, to begin with, your full year net interest margin was at 2.75% versus 3.11% in the previous financial year. If you could explain to us the reason for the decline in your NIM position and also what the future outlook for IOB is.
See, in the last quarter of the year, our margin has improved from 2.60 to 2.75. It is primarily that the last full year, the deposit rates, particularly retail also, we gave a fairly good rate. And in spite of opening a 25 lakh savings account and opening around 425 branches, the saving deposit and the current account grown only by 9%. Primarily because due to the accounts which are having direct transfer of the SB balance to the term deposit, there have been a shift in the savings to term. So that was the reason, and whereas the lending normally, there has been improvement in the yield, but that is not in commensurate with the increase in the cost of deposit. However, going forward, we are aiming that savings growth will be better pronounced now that the deposit rate have been moderated. And we are focusing more on the CASA. Similarly, there are the term deposit which are particularly on the bulk, which will have a repricing benefit in the current year. We are aiming at net interest margin to be improved from 2.75 to 2.85 in the immediate, 1 or 2 months. After that, our aim is for 3% net interest margin.
Afternoon, Mr. Narendra. Now, analysts expect the gross NPAs to remain relatively flat. What are the levels at which you see your gross as well as your net NPAs stabilizing at for FY13? And do you believe that there will be an improvement in the provision cover?
Yeah, at this juncture, we are 2.74 as far as the gross NPA, around 1.35 net NPA, and provision coverage has been 68. Earlier provision coverage was 71.70 just for the third quarter. Since the required provision was less, it came down to this level. We have a requirement of making a countercyclical buffer, even though we are not required to do, but technically, but for the fact that our 30th September 2010, vis-a-vis 31st March 2011, the NPA level had come down, but still we have to do. So we have been doing every quarterly. That itself, around 200 crores additional provision, will take our provision coverage to 70% plus. So that is on the provision coverage. As far as the gross NPA, my endeavor is to bring down below 2.74, which we are having now. It is very difficult to tell the percentage, but I am sure it will be lesser than that. And the net NPA, automatically we will go to a better proposition by the additional provision which we are doing.
And Mr. Narendra, if you could tell us what your exposure to stress sectors like aviation, electricity boards, iron and steel, textiles, etc. is.
See, this as far as our this exposure, what you have asked, suppose your aviation may be hardly around 2,200 crores. And then your infrastructure as such, power sector is around 9%, inclusive of the government and the private power sector. And overall infrastructure, including roads and ports and or other things, it may be around 15%. And textile and all will be less than 4.5% to 5%. It is within that level. And so overall, telecom, we are hardly having any exposure to these license issues and all, other than the one particular company on telecom tower, which is already got restructured. So all this sector today, like the PSU discoms, already got the one benefit of restructure. And there the net present value or to provide for that was not there. Parallelly, they had increased the interest. So it was a neutral as far as that. And with the state government increasing their tariff, this power sector in the discoms and all will be likely to fare well. And there is also a committee which is looking into giving much more boost to them in terms of providing relief and all.
And could you tell us what your credit and deposit growth targets are for FY13 and which are the sectors that are going to lead the growth? And in terms of your CASA ratio, where do you see that stabilizing?
Yeah, CASA at the moment is average around 28 to 29%. Our endeavor is to take this CASA immediately to 30% with the proviso to take it to around 31 this year. And in the next 2 years, 35%. With the opening of further another 400 branches this year, and with the focus for all our regional heads and all, the focus is only on CASA. As far as the resource mobilization is concerned, I am sure the CASA will start moving up. Coming to the overall business growth, last year also we had a fairly good business growth, but this year we have planned that deposits around 20 to 22%. Advances also around 20 to 22%. That is the level we are planning. In the sense from 3,22,000 crores, our aim is to take it to around 3,85,000 to 4 lakh crores. We feel that if we are future able to get a better pricing in terms of MTN, which we are planning 500 million in the international market, our international portfolio also will grow better, which last year has grown around 40%. If that is the case, to achieve around 22% credit growth should not be difficult. Our focus will be mainly on agriculture, which we have last year grown 28%. SME, micro and small, we have grown around 40%. And retail sector has grown by 28%, particularly housing and vehicle loan, which will have continued to grow this year too. So these are the sectors where we are focusing. Other than that, mid-corporate, we will be looking for some of the urban centers and tier 3 cities and good, well-performing accounts where we take between 30 to 100 crores. And in terms of the large corporate, we will be looking for working capital and non-fund based limits.